say you're sorry.
Hi, Assalamualaikum. Today we will present about sources of fund and uses of fund. Before we start, let me introduce our group members, which are: first, Ayu Mastura binti Rasman, Syamsul Rijal bin Ahmad Sufyan, Nurul Syafiqah binti Ashhar, Siti Nuraisyah binti Afandi, and the last me, Siti Nurmaisara binti Rahada. Next, objective of our assignment. From our assignment, we can able first define the meaning of investment based on conventional and Islamic bank. Next, we can explain the different investment between the Islamic bank and conventional bank. Next, we can define and compare the different product investment based on Islamic and public bank. Next, we can discuss the meaning of home financing and home loan. Next, we can identify the difference between home financing and home loan. Last but not least, we can define the meaning and compare Tawarruk and 5 home loan. Next, I will explain about the introduction of Bank Islam. Bank Islam established in June 1983, and it is the first bank to introduce Sharia-compliant banking product and Islamic principle to the Malaysian public. It is designed to provide banking service that align with the ethical and religious guideline in Islam. The core principle of Islam banking, including Bank Islam, are rooted in the prohibition of interest, riba, speculation, gharar, and unethical activities. Instead, Islamic banking operates in the principle of the risk sharing, fairness, and promoting socio-economic justice. Bank Islam offers a range of financial products and services that comply with Sharia principles. Some common services provided by Islamic banking include: the first is Islamic saving account, the second is Islamic financing and loans, third is Islamic investment account, which is Bank Islam offers investment account that allow customer to participate in Sharia compliant investment activities such as investing in stock, sukuk, and other permissible assets. And the last but not least, trading finance. It is important to note that Bank Islam is not limited to serving only Muslim. Many non-Muslim individuals and business are attracted to Islamic banking due to its ethical framework and focus on fairness and transparency. Islamic Bank has experienced significant growth globally, with numerous Islamic banks operating in the various countries. This growth has been driven by the increasing demand for Sharia-compliant financial service and the recognition of the stability resilience of Islamic finance principle. Next, organization structure. As you can see on my slide, this is the organization structure for Bank Islam. So, we move to the next point, which is the background of the Public Bank. Public Bank was founded in 1966. On 6 August 1966, Public Bank started its business as its first branch, which located at Jalan Gereja, Kuala Lumpur. The vision of Public Bank is Bank for the People. Public Bank started providing banking service to the masses in Malaysia. It is one of the largest banks in the country and has strong presence in the financial industry. Public Bank providing a wide range of banking and financial service to the individual, business, and corporation. Public Bank, known as for its customer-centric approach, financial stability, and strong corporate governance. There are several aspects for Public Bank, which are retail banking. Public Bank offers a comprehensive range of retail banking service, including saving and current account, fixed deposit, personal loans, mortgage, and credit card. So the next aspect in Public Bank is corporate banking. Public Bank serve corporate clients by offering corporate lending, trade financing, treasury service, and other specialized solutions. And the last but not least for the aspect Public Bank is digital banking. So we move to the organization structure. So this is the organization structure for Public. Next, I will explain about the introduction of Islamic investment. Islamic investment refers to the unique approach to invest by the guideline of Islamic law, we know as Sharia. Sharia-compliant investing seeks to align investment practice with the Islamic ethical and moral values, which prohibit certain activities such as charging interest, we know as riba, engaging in speculative transaction, which is gharar, and investing in business that are considered haram, forbidden, such as alcohol, gambling, and pork-related products. The core principles of Islamic investment are based on concept of risk-sharing, fairness, and avoid unethical activities. These principles aim to promote social and economic justice while ensuring that investments are made in the manner that is consistent with the Islamic belief. Islamic finance offers a range of investment options by complying with the Sharia principles. Some common Islamic investment instruments include: first is sukuk. Sukuk, known as Islamic bond. Sukuk represent ownership in the underlying asset or project. They provide investors with a share of the profit generated by the asset or project rather than fixed interest payment. Second, Islamic mutual fund. This fund invests in the diversified portfolio of Sharia-compliant assets such as stock, sukuk, and real estate. The third is Islamic venture capital. Islamic venture capital funds provide funding to startups and businesses that comply with the Sharia principle. So there are several investment instruments in Islamic investment. So it is important to note that Islamic investment is not limited only for Muslims. Many non-Muslim investors are attracted to this investment option due to their ethical consideration and potential financial stability. Islamic investment has gained significant popularity in the recent years, leading to the growth of the dedicated Islamic financial institution and the integration of Sharia-compliant products into mainstream finance. However, it is crucial for investors to seek guidance from knowledgeable experts or scholars to ensure compliance with Sharia principles while making investment decisions. So we move to the introduction of conventional investment. Conventional investment refers to the traditional approach to investing that is practiced by individuals and institutions worldwide. Unlike Islamic investment, conventional investment is not bound by specific religious or ethical guidelines. It encompasses a wide range of investment options and strategies that aim to generate financial return without restriction based on religious and cultural belief. So, there are several conventional investment methods. Typically include: the first is stock. Stock is investing in publicly traded company by purchasing shares of their stock. Second, bonds. Bonds is buying fixed income securities issued by the government or corporation. Bondholders receive regular interest payment and the return of the principal amount at maturity. And the third is mutual fund. Mutual fund is investing in professionally managed investment fund that pull money from multiple investors to invest in the diversified portfolio of stock, bonds, and other assets. Conventional investment focus on maximizing financial return and managing risk through various strategies such as diversification, asset allocation, and market timing. The investment decisions are primarily based on the financial analysis, market trend, and investor preference rather than religious and ethical consideration. So that's all from me. We move to the next part.
So let's move to the Islamic investment and conventional investment. For the Islamic investment, Islamic investing is grounded in Islamic finance principles. which aims to meet investor financial needs with integrity and in a manner that is fair, trustworthy, honest, and ensure a more equitable wealth distribution. We choose Bank Islam for the Islamic investment, which is named is IGIN. IGIN is a transitional investment account whereby customer can still opt for the banking facility such as mobile banking, debit cards, and standing instruction. In addition, IGIN is not protected by PIDM, for the age requirement is 18 years and above. For the benefit of IGIN, the first one is debit card facility, internet banking, mobile banking, salary crediting and sweeping facility, and the last one is standing instruction facility for payments of bill and others. Next, for electronic banking facility of IGIN, we have cash withdrawal, fund transfer, statement request, bill payments, zakat payments, and the last one is tabung haji transaction. So, for the contract IGIN, it is a mudarabah contract. Mudarabah means a form of contract between the capital provider Rabbul Mal and entrepreneur Mudarib, under which the Rabbul Mal provided capital to be managed by the Mudarib, and any profit generated from the capital is shared between the Rabbul Mal and Mudarib based on a mutually agreed profit sharing ratio, whilst financial loss are borne by the Rabbul Mal provided that such loss are not due to the Mudarib's misconduct, negligence, or breach of specific terms. Okay, next, let's move for the conventional investment. Conventional investment can be categorized include stocks, bonds, and cash. Alternative investment can include private equity or venture capital, hedge funds, managed future, art and antiques, commodities, and derivative contracts. Real estate is also often classified as an alternative investment. So, for the conventional investment, we choose the public bank, which is Gold Investment Account GIA, and e-Gold Investment Account EGIA, which allow customer to purchase the pairs available gold commodity in 99.99% finance at daily price in Ringgit Malaysia. Furthermore, GIA and EGIA also are not protected by PIDM. Let's move for the type of charge. The first one, gold quality balance of less than 10 gram as at 31 December each year, the aforesaid service fee will be waived for new account opener for less than 1 month. For example, open in months of December, the amount is RM 10 ringgit per annum. Number 2, replacement of lost gold investment account passbook. The amount is RM 10 ringgit plus stamp duty. The last one, stamp duty for gold investment account agreement. The amount is RM 10 ringgit. For the gold price, 1 gram for selling price is 294.4400 and the buying price is 283.1300. In addition, the benefit of this investment is to earn potential higher return from appreciation in gold price. Number 2, convenience of investing in gold as a trading in carry out via public bank branch or online. Number 3, affordable initial purchase and subsequent investment. Number 4, invest in gold without having to keep the gold physically. Number 5, gold is the best possible hedge against inflation. And the last one is alternative investment avenue to build up gold portfolio, which is cheaper compared to investing in a gold jewelry, as the latter will incur additional costs on workmanship.
Now, I will continue about the comparisons of investments between Islamic and conventional. Firstly, the concept of investment contract for the Islamic investment is use the mudarabah, which is profit and risk sharings, and other contract according to the ijtihad of finance aspects. For the conventional investment is based on interest and deposits. Next is the return results. For the Islamic investment is profit sharing according to the angry percentage, which is based on profit and loss. For the conventional investment is return by given in the form of dividends or fixed interest and not sharing of profit and loss. Next is sensitivity of fund investment. For the Islamic investment is free from the element gharar, riba, gambling and other things that are forbidden in Islam. For the conventional investment is based on riba, gambling and not approved by Sharia. Last is the basics. For the Islamic investment is guided by Sharia and Islamic law. And for the conventional investment is subject to company and country regulations. Next is comparisons between Islamic and conventional bank. For Islamic investment is Aygin, which is Islamic bank, and then for the conventional bank is Eagle, which is a public bank. For the Aygin, based on Sharia, which is no element of riba. For the Eagle, no based on Sharia. Second, transaction investment account will be a customer can still obtain for banking facilities such as mobile banking, debit card and standing instruction. For the Eagle, investment account allow customer to purchase the risk available gold commodity in 99.99% fairness at daily price in ringgit Malaysia. Third, in Aygin, he has a mudarabah contract, and for the Eagle, he put a higher charge. And for the Aygin, minimum balance is 1,000 for individual and joint individual, and 2,000 for non-individual. For the Eagle, minimum balance is 1 gram. And last, for the Aygin, eligibility which is 18 years and above. For the Eagle, eligibility is individual age 18 years and above who have an existing conventional clearance account or saving account or current account or saving account with the PBE access.
Next, home financing, also known as commodity murabahah, is a form of home financing used in Islamic banking. It is a Sharia-compliant financing technique that enables individuals to acquire a home without paying or receiving interest, which is prohibited in Islamic finance. In a tawarruk arrangement, the customer approach a financial institution seeking home financing. The institution purchases a tangible asset such as a commodity at a certain cost. The customer then buys the assets from the institution on a deferred payment basis at the higher price, payable in installment. The customer subsequently sells the asset in the market for cash, which provide them with the necessary funds for purchasing the home. The deferred payment amount represents the principal and profit to be repaid by the customer over an agreed upon period. Tawarruk has gained popularity as a halal alternative to conventional home loans for individuals who wish to adhere to Islamic principles in their financial dealings. Home loan, known as a mortgage, is a type of loan provided by financial institutions, such as banks or mortgage lenders to individuals or families for the purpose of purchasing a home or property. It is a long-term loan that enables borrowers to fund the purchase of a house and pay it back over an extended period of time, usually with interest. Home financing, on the other hand, is a broader term that encompasses various methods of obtaining funds for purchasing a home or property. It includes not only traditional home loans but also alternative financing options like lease-to-own agreement, rent-to-own schemes, or other creative financing methods. Next, home financing by Bank Islam. As we know, Bank Islam Property Financing I Tawarruk by Baiti Home Financing I is a Sharia-compliant home financing product offered by Bank Islam Malaysia Berhad. It is designed to help individuals purchase residential properties in a manner consistent with Islamic principles. The financing product follows the principle of Islamic finance, ensuring that it is compliant with Sharia law. The financing is based on the concept of tawarruk, which involves the sale and purchase of commodities to generate funds. In this case, the bank facilitates the sale of commodities, typically commodities such as metal, to the customer who then sell them in the market to obtain cash. Baiti Home Financing I is specifically tailored for the purchase of residential properties, including completed houses, under construction properties, and refinancing of existing home financing. Bank Islam offer financing up to a certain percentage of the property value, which typically range from 70% to 90%, depend on various factors such as the applicant creditworthiness and the type of property being financed. The financing tenure can range from a minimum of 5 years up to maximum of 35 years, allowing borrowers to choose a repayment period that suit their financial capabilities. The profit rates charged by Bank Islam are competitive may vary based on prevailing market condition and other factors. The rates are disclosed upfront to customer, ensuring transparency. The financing is structured on a fixed monthly installment basis, making it easier for borrowers to plan their finances. Through the financing period, the property is registered under the customer's name and they are the beneficial owner. The bank holds a mortgage over the property as security until the financing is fully prepaid. Bank Islam offers various payment options, including standing instruction, salary deduction, and online banking facilities, making it convenient for borrowers to make their monthly repayment. In the event of late payment, the bank may impose late payment charge as per the term and condition of the financing agreement. Next, definition of home loan by public bank. As we know, public bank one of the largest bank in Malaysia, and if you are interested in their home loan product, public bank offers various home loan option to customer in Malaysia. These loans can be used to purchase residential properties or for refinancing existing home loans. The specific terms and condition may vary, so it's the best to contact public bank directly or visit their website for the most accurate and up-to-date information. Typically, when applying for a home loan, the bank will assess factors such as your income, credit worthiness, property value, and loan amount requested. Public bank may also consider to the loan tenure and interest rates when determining your eligibility and the term of the loan. To apply for a home loan with public bank, you will generally need to provide documents such as your identification document, income proof, bank statement, and property-related document. The bank will review your application and, if approved, provide your the loan offer, including the loan amount, interest rate, repayment schedule, and any associated fees. It's important to carefully review and understand the terms and conditions of the home loan before proceeding. Consider factors such as interest rates, repayment tenure, and any additional charge or penalties. It may also be helpful to compare to the home loan offering of different banks to ensure you get the most suitable option for your needs. Next, 5 home plans for a home loan. First, purchase plan. This plan involves obtaining a home loan to finance the purchase of a new property. The loan amount covers the cost of the house and the borrowers repay the loan over a specific period, typically through monthly installment. Second, refinance plan. This plan involves refinancing an existing mortgage loan to take advantage of lower interest rates, extend the loan term, or assess equity in the property. Borrowers can apply for a new loan to pay off the current mortgage and partially reduce monthly payment or obtain additional funds. Third, construction plan. If you plan to build your own home, and construction loan can be suitable option. This loan provide funds in stage as the construction progress. Once the house is complete, the construction loan can be covered into a mortgage loan. For renovation plan, if you already own a home but want to make substantial renovation or improvement, a home renovation loan can be an option. This type of loan provides funds specifically for home renovation and is often based on the project, post renovation, and the property. And the home equity. Number 5, home equity plan. If you have real equity in your home, you can consider a home equity loan or a home equity line or credit. Hello, this option allows you to borrow against the equity you have accumulated using your home as collateral. The funds can be used for various purposes such as home improvement, debt consolidation, or other financial needs.
Now, let's move on to what is the comparison between Islamic home financing and conventional home loan. For Islamic home financing, here, the concept of buying something on the borrower's behalf and sell it back to the borrower at profit is used. Islam do not allow usury or interest or riba, but it's allowed trading. This is why the bank buy the property on your behalf and resell it to you at the profit instead of lending you the money and then charge you interest. This profit rate can be based on fixed rate or a floating rate. Payment to the bank are made through installment similar to conventional financing. But in the conventional home loan, the bank will lend you money to buy your property, and in return, you will have to pay back the principal, the total of your loan, together with the interest on the amount. The payment you make to the bank is by installment over the set tenor, and each installment amount is split between paying down the principal and servicing interest. This interest is cost of borrowing the principal amount. This is where the bank makes its profit. Most of the time, you will also have insurance and taxes included in the monthly amount. How much interest you end up paying will depend on how quickly you repay the principal amount. What the interest rate is, how much it goes up or down, as well as whether you default on your loan or are late with any of the payment. Next, we are moving to the comparison between product offered by Islamic bank and conventional bank. Islamic bank that we choose is Bank Islam, and we choose public bank for conventional bank. Bank Islam offer Baiti home financing that use Tawarruk home financing concept. Tawarruk home financing concept is free from riba, gharar, and maisir. Meanwhile, for public bank is offered 5 home plan that use home loan concept. The bank will lend their money and in return to repay the loan interest. Tawarruk home financing is permissible as there are no prohibited elements. For margin of financing, for Bank Islam is up to 19%, meanwhile margin of financing for public bank is up to 100%. Let's talk about contract and legal document that both Islamic and conventional bank provided. We have Property Financing I, Tawarruk, which is Baiti Financing I, provided by Bank Islam, and 5 home plan provided by Public Bank. For the eligible criteria, applicant for Baiti home financing is Malaysian citizen, age 18 and above, not a bankrupt and have any legal action. And for 5 home plan, the applicant should have minimum annual income Ringgit Malaysia 24,000, age 20 to 70 years old, and any nationality can apply. Then, for financial tenor, Baiti Home Financial is providing up to 35 or age 70, whichever is early, but 5 home plan only offer up to 35 years. And for the required document, Baiti Home Financing want from applicant is photocopy or identity card, sales and purchase agreement, and payslip for salary earned. For 5 home plan, also need document requirement by applicants such as applicant from the bank or online, a copy of identification card or passport, a copy of SPA, blocking receipt or letter of offer from developer, and also payslip from salaried and self-employed applicant. This is the product disclosure sheet from both Islamic bank and conventional bank. We have Property Financing I, Tawarruk, which is Baiti Financing I, provided by Bank Islam, and 5 Home Plan provided by Public Bank. Next, we are moving to Tawarruk Home Financing. Modus operandi. The first step is customer identify a house and pay 10% down payment to the developer or the house owner. The second step is the customer approach a bank to apply for financing and the bank will access his credit worthening. The third step is after approval of the financing, the bank will buy a commodity from a broker A. Next step is the bank sell the commodity for the customer and the customer will pay the amount of the bank in installment over the financing period. The next step is customer sell the commodity to the broker B and get cash. And the last step is the customer pay the remaining 90% balance to the house developer. Now that we know that what is differentiate Islamic and conventional home loan, it should be easier to identify the key benefit from each and choose the one that suits the best. As a Muslim, we should choose Islamic banking product because Islamic product is a system that following laws, Sharia principle and Islamic-based economy. Islamic principle dictate that money lending, which is interest-based, as well as investing in businesses that are considered haram or unlawful are prohibited. Conventional financing profit by changing interest on loan, meaning that borrowers will end up paying back more than they borrow. Islamic financing is instead based on making a profit through the sales of commodities. Basically, the buyer asks the bank to buy the exact item that they want financed, which is then sold to them at an additional markup. The buyer is then asked to pay the item in installment or through a rent-to-own scheme. All this is known as the principle of mudarabah and is basically the concept of providing financing to consumer based on the predetermined profit rather than dealing with interest. That's all from me. Thank you.
Audio Jungle.